We got to talk about something that actually has been underway since January, but somehow in the last 10 days has become all the rage from blogs, from social media. There have been news stories about it and such confusion. All right, 6 out of 10 people taking out a mortgage when they buy a home are taking out a mortgage from the government entities, Fannie Mae and Freddie Mac. Now, these two organizations used to be, could call them quasi-public, semi-public, whatever, entities. And then when the banking scandals happened 15 years ago and the banking market basically seized up, these entities that ended up buying mortgages from banks both went insolvent. And we, the taxpayers, bailed them out. And Fannie Mae and Freddie Mac remain federal agencies now. My preference is that they be sold back into the marketplace. But for some reason, no administration we've had in power over the last 15 years has done anything about moving the government out of being responsible for the 60% of loans that Fannie Mae and Freddie Mac make. And then you've got all the loans that different federal agencies made prior to the banking scandals of 15 years ago. And so essentially, we have an overwhelmingly government-run mortgage market. So this is where it gets into a sticky wicket. I don't even know what a sticky wicket is, but that's an expression that people have used. Christy, do you mind telling me what a sticky wicket is?
I feel like it's croquet, but I'm going to look it up. I feel like it's a British thing.
Okay.
Okay.
I don't even know. It just means like this is messy. So the feds have a legal requirement to try to make housing approachable, affordable, and potentially available for lower income buyers and for people with lower credit. But people who have lower income and lower credit scores and put down very little down payment have a much higher default risk and potentially foreclosure risk on a mortgage. Did you find?
Yeah, it's from Cricket. I had the
You were right?
No, I said croquet.
Oh.
Cricket.
Well, it was something with the C, and it was something from the British Empire, right?
Yeah. I was getting around in the territory, I guess, but yeah.
I don't even exactly know what cricket means.
Cricket's a sport.
Yeah, I don't really know anything about it. Okay.
Wicket's a part of the field in croquet.
Wow. See how much you learn? See, it's that Irish blood in you, that European blood. You just know this stuff. Okay, so going back to the mortgage fee. So the way it's worked is the feds continually try to get the mix right. How much should the fees be on people that are higher risk versus people that are lower risk when they take out a federally backed mortgage from Fannie Mae or Freddie Mac? So they have changed the formula, and the change already went into effect months ago, and it affects people who've taken out mortgages recently. It officially goes into effect in the next couple of days for people closing May 1st or later, but lenders have been going by the new fee schedule for a while. So what does it do? It depends on who you are, how much down payment you're doing. By who, I mean credit score. Combined with down payment, what's going to happen with fees you have to pay up front for the government to absorb the risk that you might not make your payments. So what's happened is that people who have really high credit scores, 780 or above, depending on how much down payment you make, the fees you have to pay have gone down, stayed the same, or gone up. It's pretty much a wash for people in that top tier of credit scores, 780 or above. On the other hand, people who have a good credit score, generally 680 or above for a mortgage, that depending on where you are in the tier, and I have it from Mortgage News Daily here. I have the chart because I go to the source and I read really dull stuff. And I'm looking at what happens with people's loans from credit scores of 640 and above, and it changes every 20 points. And Krista, could you describe this to me? Green is when the rates are going down. Red is when they're going up. And what do you see overall for rates?
It seems like that most of them are going to be going, well, it's a mixed bag. I mean,
so there's more green than there is red. But the people that are being reported about in the marketplace are people who have credit scores between 720 and 760 are the ones that the news stories have been about. If you have a credit score of 720 to 760 and you are not putting a lot down, you are going to see an upfront fee that is going up from where it was for originating that loan. So it's a fee that you can be charged at the time of closing, or the lender can charge you a higher rate over the course of the loan every month. It's generally better to pay that fee up front. But for the typical borrower that I was able to crunch the numbers, who has a good credit score, not a fantastic one, but a good credit score, is going to be about $375 more. For a person with a bad credit score not putting a lot of money down, their fees are going down several $100s. So it varies completely. And I wish I could show you a close-up for those of you who watch our YouTube show. Can we add this to the notes?
We can certainly add a link to it. I don't think
and we can do it for both the audio podcast and the video.
Sure.
Great. Because
I can't even really read it without glasses. Standing right here.
Really, you have to have, oh, that's why you were squinting?
Yeah.
Is you needed glasses? Okay. So the point is, this affects people all different ways at all different credit scores. And the news stories have been about this sliver of people in this 40-point band that are seeing multiple hundreds of dollars more in closing costs from this. And the government, in its infinite wisdom, decided that the fees were way too high for people with low credit scores, and there's a cross-subsidy going on here. And the best answer to all this is get the government out of the mortgage business as much as possible. Let the free market handle this, and that's what I would do. The news stories, and particularly what's been running around on social media, have made this a much bigger deal than it actually is. But if you look, where there's a lot of smoke, there can be a little bit of fire. There are segments of the market, and you can look at the charts we're going to have you, that will show you based on your credit score and how much down payment you're doing, if this affects you in a good way, a bad way, or in between. And I just want to make it clear, this isn't a horrific event like people have been, like the rumors have been spreading the last 10 days or so. But I still don't like the cross-subsidy nature of this.